Hi, this is the SPX Outlook. Today is Saturday the 18th, and we're looking at the 4-hour chart. As you can see, we have had another bull run towards the end of the week. So if we start late November, we had an up move and then a retracement to 36.30, and we have that expansion pattern again with identified levels to 37.49. Definitely, this is a strong resistance. So this is possible at this point, although as you can see on Friday we had a lot of roller coaster, but of course there was FOMC, then quadruple witching, and inclusion of Tesla. So there could be still pretty much erratic moves early in the week. Overall, I would say that bulls would probably not be satisfied until they hit that resistance, but as I said, it could go either way and return to 36.70 and even lower. If I now let's get rid of this one, and if we just put on a fib retracement here from the last up move, we see that the market dipped to the second fib and bounced back at the close. This bar with a close at 37.28 was actually after the close of the S&P. This 24-hour CFD takes its prices from futures, then discounted to cash prices. So I would say that overall the trend should still be up, but we could have, with the low volumes, it will also exacerbate wilder moves. As I said, now it's going to be window dressing, portfolio recalibration with Tesla not being part of the major index. Let's not forget that Tesla will be listed as the sixth stock. As you know, the SPX is a weighted index. So, of course, the huge capitalization now of Tesla puts it in the top 10 position. Apart from that, I would say again that there shouldn't be major moves until early January, where we're going to start seeing apprehension because of earnings. Even though the Fed is indicating quote unquote QE infinity, basically they will print as much money as needed. We now hear about MMT, modern monetary theory, basically saying that you can print money forever. For any conventional thinker, this is really, really crazy. Whether the world is changing and printing money doesn't count. I mean, I've got difficulties getting used to this way of thinking. But anyway, let's move this all-time high line up here. Okay, so I would say generally a little bit of bullish bias, especially there's going to be a lot of purchase of S&P if it hasn't been done already late this week, because the Tesla stock will join S&P at the open on Monday. So let's look now at a longer time frame. As you can see, the bullishness is still very prevalent. You also notice that 37.50 is the major resistance here as well. Here we see the crazy up move since the elections. Let's not forget also that Donald Trump is still president. He can still cause a lot of damage before he leaves office. So let's not be too confident about the next few weeks. There could still be a lot of things happening, especially in the tension with China. Right, and now quickly the look at the 1-hour charts. That gives us the outlook generally for Monday, and this is more or less the same. We also see here that we reached a 50% retracement here. We didn't go all the way down to the third fib and pivot, so I would say the market should also go and try and hit the 37.50. Here we see a line that sometimes we tend to overlook it. That's called a stall line, and so we may have the bulls losing steam around this level and not reaching 750. That's still a possibility. Overall, I would say bullish bias and the market hovering in this range, 36.70 to 37.50. Okay, that is it for now. I wish you a lovely Christmas. I will still be around on Slack for daily updates, and the next video will be on the current trades. Thank you for watching, and bye.